Oh, we got that pulled up here. I have to. Let me give somebody a host here and make her a co-host. Okay, if you see, just made you a co-host, okay? So if you see people jumping in the room, if you could please just, I think it should give you the option to admit them.
All right, no problem.
Thank you. Yeah, you gotta have a ticket to get in here. I like that feature. It's a pretty cool feature. Okay, so we were diving. My screen still is crazy, but we were diving into market structure. So to define a real quick recap, market structure, we're going to be looking. The market has three states. The market is going to be either in a bullish trend, a bearish trend, or consolidation. To identify a bullish trend, we're going to be looking for higher lows, followed by higher highs, followed by higher lows, followed by higher highs. Opposite are the inverse for a bearish trend. Going to be looking for lower highs, followed by lower lows, lower highs, followed by lower lows. So to me, coming from I'm an 80s baby, I always look at some of these as like cheat codes. If you guys ever remember some of the old, I'm not sure we got any video games player or anybody that plays video games, but there's cheat codes that we put into the games to kind of elevate our levels. So this is what I kind of look at how it kind of translates to me as I'm pushing in these buttons, these higher lows, higher highs, and it gives me kind of a cheat code or a direction to where the market is going to be potentially heading. So we tackle bullish trends, bearish trends, and then we look at this odd fellow here, which is going to be our consolidation. This is the part in the market where a lot of people get caught. You don't want to be caught in trying to trade this consolidation because all that's going to happen is you're going to get whipsawed. You can't make a sound decision here. We don't know if the market's going up or the market's going down. It's just basically doing both of them. Now, I will further indulge or dive into this, that there is ways to play this market. But at the beginning, I want you guys just to focus on identifying the bullish, the bearish, and if something we need to stay away from. Another lesson we'll go into, this is actually going to be a range. So I like to say the range brings change. So there's an area of key points that we can tackle to be able to trade this. But for a base level, for you guys to start understanding market structure, stick to the bullish trend. When we're bullish, we only want to buy into the market. When we're bearish, we only want to sell into that market. Now, I threw a kind of oddball at the last group here. We had state changes. So this is a part that most, when you get into market structure, people avoid. So they're just getting you just participating in a trend, whether it's bullish, whether it's bearish. But the market also has these areas here where the market, we call it a rollover. The market rolls over and it goes from a bullish state over to a bearish state. So luckily we got a live example of that happening. We got missing a consolidation. We had, technically this would be considered the start of the bearish trend, but we didn't break the previous or the most recent lows. So once it broke, then to me, that would be the bearish trend starting. So textbook, this would be a bearish trend, but the market could always come down here, shoot back up, and continue the bullish action. Market did come down, retest of that zone. We have a nice push down. We went over how the zones interact as support and resistance, or it's going to be a concrete. We previously dove into some support and resistance, but we'll retouch that subject. But if you guys notice, we start always to our right, and we're going to look to our left. We start in the future. We look to the past in order to determine the future, or to get an ideal or a estimation of what could happen in the future. So if you guys are looking at these zones, you're going to notice that a support was also previously resistance. Now, don't judge me on my drawing. I don't have a Picasso here, but this should have came up here and reached that. So we have the ceiling turning into a floor. To me, that's going to be fortified. That will be a fortified area, or I call them areas of reference. So anytime the market is here, we're going to expect the market to do one or two things. The market is going to bounce, or the market that's going to break through these areas. That's why market structure is very vital. It does give you guys an understanding of where to actually interact in the market. We don't want to chase the trades. We don't want to have a fear of missing out. We want to do everything calculated, and we want to wait until price comes to us. When price comes to us, then we make our decision based on other factors like maybe the indicators, Bollinger Bands, price action, in order to participate in the market movement. So just to bring that back around full circle, we got the bullish trend going into consolidation, coming into a bearish state. And if you notice, right at the previous zone, so we start to the right, we look to the left, the market made a decision. It bounced a bit, came back up, wasn't enough momentum to push it back bullish. We have to start technically, pips over pad. My method, this will be the start of the bearish trend, not up here. Or excuse me, we have it twice. This will be the continuation, which we'll dive in deeper as well. This will be a continuation of this bearish trend that was started. So the trend continued, and we're still looking for sales. So the main key aspect I want you guys to get out of this is the trend. There's a saying, the trend is your friend, which is it stands true. If you see a bullish trend, you recognize those higher lows, higher highs. You only want to be buying at these zones, the previous zones, are these points here, which are going to be pivot points. But we'll dive into that. I don't want to throw too much at you guys. So we notice these little zones here that I started drawing, these little circles, which are going to be areas that where the market, there's swing highs and swing lows, or your swings. So we're looking at those swings here. Also can be called pivots. And they're going to be our points to where we're going to make decisions. Also bring us into structure and zones. So I'm going to check the chats real quick. I know I kind of blast through that, but I'll send the recording out. Any questions so far? Where we're at as far as structure, identifying higher lows, lower lows, bearish trends, bullish trends, bearish trends, consolidations. I have any questions so far on that end? All right, going once, going twice. All right, we're gonna dive into swing points. So we see these circles I have here. These are gonna be decision areas, and when the Zoom cut off, or when we exited the Zoom last time, we were here at this point where we were coming full circle with why this accumulation. We were coming into full circle. We came a little bit more in depth than just a basic market structure. Basic market structure would just be the higher highs, higher lows, lower highs. But we do have, the markets at times can be random. I'm not going to say we can't project what's going to happen, but sometimes it is random. As we have case in point, the market consolidated. It came down. It looked like it was going to be textbook bearish trend. So we have the lower low followed by a lower high, followed by a lower low. So we have this same example. So it was good that this happened. It popped up on the charts. A lot of people can find market structure. It's easy to locate higher highs, higher lows. But what do we do and what do we call when we have price coming here? Do we get out the market? Do we hold this trade? What decisions are we making here? Do we counter trend trade? So that's the point where we're at. I was showing counter trend. So I asked the question, is this going to be still considered a downtrend? Well, it's based on perception. We have some of the guys that's saying, this is a downtrend still. We have some people, and I was highlighting that this could be considered an uptrend. So the market is subjective, and there's different reasons that we can attack the market. And, just because we both were right, I know it sounds counterintuitive and it's odd, but we both were right in a situation. Now, the uptrend is going to be a lower probability setup, or it's going to be more of an aggressive move. And the downtrend is going to be more of your conservative, or if you want to say even go to the extremes of saying correct, depending on how you perceiving the market or how you're looking at the market. Then this is still going to be the downtrend. So we have the lower low followed by a lower high, lower low followed by a lower high, lower low followed by a lower high. If we notice, we never did break the previous structure. So we never broke this previous structure here. Never broke this actual area. Looking at the pivots here, we never broke that previous lower, or excuse me, your lower high. So technically, we are still in a downtrend on this particular time frame. Now, if we were to zoom in, these candles will look a lot different around this area. You'll see that these up candles will be a lot bigger. So there's plenty of, this is a day chart, so there was plenty of room to take the long trade on a smaller time frame. So we always start with the higher time frames and we zoom in to make a decision. Now, if we're trading on the daily time, no, this is still technically textbook a downtrend. If we were to zoom in, then this would be more of a uptrend. Now, how will we know after we got into the downtrend? How are we going to know when this uptrend is going to stop? So what we will do is we're going to be looking at the previous structure. Came up there. Did it break this structure? No. Downtrend resumed. It did continue to push up a little bit. It came back and tested it again, giving us a textbook, what we call a double top. And then the market dropped again. Came back up and tested that area again, still couldn't break through it. Market dropped again. So just to highlight what I was saying earlier, it's important for us to wait for these areas, and that's where we're going to react. We want to do everything calculated and methodical. We don't want to just because we see the market drop and jump in. You know, we sometimes we interact here, we get into the trade here because we see the textbook lower, lower low, lower high, lower low, lower high. We want to interact just randomly after the trends already started, and then we have the institutions and banks that come and swipe it right up underneath us. They're waiting and they're looking for us because we're taught textbook to only interact in a trend, to wait for the trend to begin and already started before we're interacting. So we're catching the market down here and they're swapping the market up. So we'll start off, we'll be in profit. You come back a few hours later and your stops hit. So this structure is going to avoid that for you guys by only participating at certain key zones. So let's see if everybody with me so far. Let me get a one in the chat box because I know I was kind of speeding through some of this. Is anybody still following me, or am I in left field out in space somewhere? Okay, I got still a couple people still with me. Okay, that's good. That's good. Perfect. So we're basically dissecting the market. I didn't want to go too so in depth with this, but that's just how it played out. So I think this will help a few people as far as following the structure. Main focus is to start identifying. What I want you guys to do over this weekend is start looking at the charts, start noticing these points here. Draw up look for your higher highs if we're in a uptrend. So we'll look for our higher highs, higher lows, higher highs, higher lows. If you're in a downtrend, look for your lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. Do that throughout the weekend and start seeing how the market interacts in these areas. So you'll start having your key points here that you guys can identify of when to take the trade. If you notice, we don't have any fancy indicators. We're making a decision. We don't have any type of, we're not using nothing but basic price action and structure. And then we go into adding our overlays and we'll see how they match up. But we don't need anything like that. Honestly, I want you guys to get familiar with the language or what the market is telling you. The market is always going to tell you a story. We're going to have the story, but then we want to learn the numbers behind the story. So we'll start pointing out these zones, and that's what this market structure is going to give us. We can see the story. We can see that the story is in a downtrend, but when we add in actual market structure, it's going to give us the numbers behind the actual story. And if the numbers don't add up, it don't make dollars. So we want to make sure that these numbers are adding up. We'll start noticing these zones. So we know at 2411, the market likes to do something around this area. So what am I doing? If the market goes bullish, if the market does go bullish here, what am I expecting at this 2411? Anybody know what I'll be expecting here? That may not have been the best question, but let me ask you, what let's see how I can break it down. Okay. If the market comes back up here, what should I expect? What are the three things that I can expect the market to do? Would it be see, I got somebody that jumped in there. Sell. See, that's the thinking that I want you guys to have is, okay, this has been holding up, so we're going to be looking for a sell. We particularly can look for this same thing to happen. You have one of three choices. You have an A, B, or C. Now, the way we come to the determination if we're going to sell is we're going to be, when the market comes up here, we're going to be looking at either our indicators or we're going to be looking at a smaller time frame. So once the market comes up here, so if I was already in a trade for some reason, if I got into the buy, I know at this area, I'm going to be looking to potentially sell. So I'm either going to be pulling my stop loss up, I'm going to be taking my profit at this area, or I'm going to be getting ready to sell into this market based on some previous factors that I see here, that every time we get up here to this area, price recently has been selling, or price is rejecting. So we got a rejection there. We did get a little push out, came back down and couldn't hold this bullish momentum. It went to a previous zone. Now we have this zone established. We have the floor. It's been a ceiling. So the higher probability trade when we got up here is going to be for this to stand true, for this to sell. And Jerry, my man, that was a great synopsis, because most likely we're going to have a trend. We do have a trend established. So we're going to have 2 points of reference here. So let's take a look here. Let's say price came up. Price came down. Gave us another. And price came up for some reason and touched that. Now we don't know. We can't, I always tell everybody, they ask me like, well, how do you know where price is going? How do you know what price is going to do? How are you catching these trades? Well, it's because I come to the market with the mindset, if I don't know what the price is going to do, I don't know what the price can do anything. So if you hear somebody telling you, oh, well, this is 100% accurate, I can tell you that price is going to do exactly this at the exactly moment. It's hogwash. Don't believe the hype. No one knows exactly what price is doing. We're actually, we're interacting in economics. So, there at this point right here, somebody can set off a bomb, or as we all see the big thing in the coronavirus right now, the virus can take effect and it shoots this thing way down, or vice versa, it catapults it to another direction. So, like I said, I like to have come to the market with an open mind. I don't try to stay too bias heavy. I follow the trends and I look for key points in the market. So, even at this area, I may have not took a buy here unless I was on a smaller time frame. I would have let the market come up to here, and if I see that there's a more high probability chance for me to sell it, I'm gonna sell that market, that actual whatever pair this is or this instrument, sell that. I'm not worried about the outcome. I'm worried about protecting my capital, which would be to put my stop above this previous zone and give it a little room. Another thing that I did, and I kind of went on a tangent there, but Jared, I liked the way you were thinking on that, because when we came up back to this area, it's going to be a double point is what I wanted to highlight. Is we have the structure here, and then we also have it being a trend line, or we have a trend here at that point as well. So we were looking kind of into the future, and you guys can see how powerful, even from Jared's synopsis, you can see how powerful that structure trading can actually be, because it came down. Let's say that it was coming back up here. We didn't have any of these figures drawn, but if you do notice, coming from this high right to this structure point, it'll start a valid trend or a valid trend line. So you're gonna have two reference points. You're gonna have this area of the trend, or the bearish trend continuation. And even if I was to draw it from like here. Let's see here. Well, kind of be. I mean, it's not textbook right now, but you guys can see how there's a lot of resistance for the bulls at this area at this point. It's a key point. So let me check the chat real quick. See a couple things flying up. Okay, now we're good there. So that's going to be the value of structure. Um, Once again, I just want to leave you guys with. We'll get ready to wrap up here, and I'll take any questions. But I wanted you guys to see these actual swing highs, swing lows, these swing points. So this weekend, if you guys want to jump into the charts, mark up some of these areas. You can mark up a lot neater. I'm pretty sure you guys are going to be more refined artists than I am. So you can mark off your higher highs, higher lows. Start noticing these bullish trends, these bearish trends. Consolidation is what I mainly want you guys to see. I threw a kicker at you. Now see if I can get that recording and maybe combine them both together, this one and the last one. But you guys will see how market switches into different states. So this highlights what I like to call. A lot of people like to look at bearish. This is kind of a textbook, but took you guys a step above because I like to look at rally base drops, or you'll have rally base rallies. So this is what happened here was you got a rally, a base, and then a drop. So there's different states in the market. It's not difficult. There's only 3 different things you guys want to notice. And from there, we build upon that, and you'll be able to decipher exactly what the market's telling you for my more advanced people. I say this market structure works maybe about 75, 80. I would even go about 80, 85% of the time. If you just identify the trend that it's in and just go with the trend. It'll keep you, safe and out of the way. But we do have these key, I have more refined traders that as you get more in tune with the market, it seems like we always get in when the trend is reversing. So I'll end it with that. I like to say that the trend is your friend until it ends. So we're going to definitely look into ways to identify when it's ending and when it can potentially continue. But that'll be kind of my little tad bit so far on basic market structure. We can dive in deep as far as styles, different ways of looking structure, different things I've seen throughout my time in the market. But I don't want to go too in depth tonight. Keep this on a base level for anybody. But was there any questions on what we went over so far, or went over tonight? Were you guys ever able to understand kind of these concepts on far as bullish, bearish, and consolidation? And be honest, I'm still learning like you guys as far as this teaching. And I spent a lot of time in the markets, but this is something new for me as well to be able to present this information and get it out of my head. So you guys work with me, I work with you guys, and we'll definitely tackle this market.
Yeah, this I understand. I just came in. Thank you for the information. Um, I understand the market structure and the trend, consolidation, bearish and bullish. But what I have been seeing lately is that um, is the retracement. It goes so far back that if you don't really get the entry point, you may get eaten up by the retracement. Well, that if you don't place your um, stop loss at some level. But this is what I have been seeing lately, that it retraces so far back that you think it won't come back down.
Indeed. And I can cover that real quick for you. You know what's so funny is I'm glad you highlighted that because I had drew at the beginning of the class. I was trying to just show the bullish trend and the bearish trend, but my art was ugly, and it gave us exactly what you're talking about. Like we have a very extended type of retrace or pullback, and then it shot into it reversed or whatever in this example. So to kind of answer that, what we want to do is let's see. And we were looking at that over here as well. Like this was kind of exaggerated move. Okay, I'm gonna give you guys more, and this may help some people out. I always start off with concepts over technicals because I want you guys to know how these different structure points and things are made. So we have to look. I always call it looking outside of the charts. We want to come into the market with the concept of what are the banks and hedge funds actually doing. So what's going on in the market is going to be, we're in a live auction. We're actually in a live auction. So they're going to be, bids and ask, bids and people buying. So it will have just like a normal auction. You have, can I get, well, this is going to be, let's start down here at the uptrend. We're going to have like 5, 10, 15. Do I got 20? Do I got 25, 30, 35, 40? Price is going to go to the highest bidder. It's also going to go down to the least expensive seller. So we remind those couple things. We can look at different points into the market to be able to interact and to be able to extract what's kind of going on. So we want to look at this like this. Okay, we see that the market has been going down for a while here. Say we interacted here at this point and we got into this sell. So me thinking, put myself in the shoes of a banker. I'm at this point, I'm looking at the market. I'm like, okay, I entered here, but we have been already in this trend. I know that trends don't last forever. That's one thing people don't highlight. The market only trends about 20% of the time. The other 80 is basically, in a grand scheme of things, it's actually consolidating. So sorry, I got everything popping up at me right now. Now to come back, I want to just throw that concept out there. You guys just start looking at, okay, if I was a banker and I was ordering millions of dollars of shares or this currency, would I want to participate at such a low price? Would I want to participate if price was down here? No, this is going to be people like us, like smaller amounts is getting into this because we see the trends already going. We see, this broke or this broke. The banks and hedge funds are going to be the guys that's starting these trends up here at the top and the bottom. And what they know is they know that there's going to be people like us is getting in and trying to ride their coattail. So they do exaggerated moves like this to actually kick us out the market. And then they recontinue because they're greedy. And then they actually drop the price down to the level that they were trying to go into. So that's going to be as far as a concept, an ideology, or a methodology that could help you to identify. Okay, if I'm getting into a trend, what I'm going to do is look where I'm at in the market, and I want to see in the past, where did I come from. So I look where I'm currently at, kind of like in life, and I'd be proud of where I came from, where I'm going, where I'm headed, the knowledge that I'm gaining in the market. And I want to look at where the price started, where it's actually coming, where I'm actually interacting at. And I want to think just, hey, it's been trending for long. Do I want to be less aggressive as how far I'm going to be holding this trade? Do I want to just get like my 30 pips, 20 pips and dip? Do I want to see this as an opportunity to hold this trade? So I'm coming to the table with those concepts. Now, as far as we're going to hit it on both sides for you. So that's the mindset that I'm using. As far as technicals, you can use things like, we can use things like Fibonacci. Whenever you're in doubt, you want to pull out, this is when you're pulling out your different tools. So let's say, for instance, I got in, this would probably be the best example. I got in here and price started to come pull against me. I'm seeing that we're at the previous structure that we just broke. We start to the right. We're looking at the previous highs, the previous lows. We look here and we see, okay, we're at a structure, we're hitting here, and price is not rejecting. I'm already in the trade and my profit is just I'm losing a lot of my profit. What do I want to do? Do I want to get out, or do I want to keep holding this to see if it's going to drop again? So what you can do is you can throw over your Fibonacci, and you want to take it down to the most recent low. So we'll have to say that none of this was really here. Say we were here in the market, and I can do you guys one better. Let me do this real quick. Replay. We're going to erase all that. So we were here in the market. We were in a sale, and price started pulling against us. So we're like, what do we want to do? And so price started kind of rejecting. So we're pulling out that Fibonacci, and we're going to start looking at these levels here. The 38.2, the 50 level, the 67.8, or on you guys, this is probably be a 61.8. I have mine a little exaggerated here. But the 50, if we break above the 50, it's going to be considered a trend reversal or a bullish trend. So we're going to play this market a little bit. So it started pushing off, man. It's going too fast. I couldn't even show you guys that example. Let's see if I can rewind it again. I had it sped. I was doing some back testing, and let's try that again. So if you guys notice, we're getting into no man's land here. Say we were in the sale. We're all the way back up here. It ate up all our profit. Do we want to hold this, or do we want to take our profit? So I mean, the obvious thing to do would be, of course, we want to. Okay, that was a good question, my man. Okay, we're gonna highlight some kind of different areas, and I'm glad to have you guys because it's giving me the ability to pull out a structure into these lessons of some of these things that's not textbook. You know, I can tell you guys, hindsight's 2020. I can come over here and I can bull crap you through the market and tell you, you know, this is always going to work, but this is a prime example of some of the things you may see in the market that's not going to be textbook. So we have, you know, these fibos are going to be great to highlight. Okay, if the market came out, it did break. We were in a sell. It broke the zone. Right here, you're going to be leery, like, what should I do? Personally, it is all preference. It goes back to the market. It's all subjective. So you will want to be taking your profit here. Now, say you came back and you weren't able to take the profit, or, you know, the market had already moved over here. So your next point of reference would be this Fibo level that you pulled out. Okay, is the market going to hold this Fibo level? So we're going to play the market as if I was actually trading this. So I'm in a sale right now. Looks like the Fibo may hold up. Do I want to get out of this? It's giving me opportunity to make my decision if I want to. Okay, it broke. Now I'm like, okay, what do I want to do? Let me pause it. It broke this area. Now I'm in no man's land. It hasn't hit my stop loss yet, but I'm in a negative. So just to recover that, the way to know if you're going to hold, even though these are exaggerated retraces or pullbacks, is going to be based on your risk to reward factor and why are you actually in the market. So at this point, were you in here to scalp out a few pips? Were you in this to kind of knock out a home run? What type of risk to reward do you have currently? Are you looking for 1 and 3? Do you have your stop loss 30, 40 pips? This is where things like this, the only way I can tell you guys, technicals are going to help. But the thing that I think will give you guys the most, be the most help for you is to live and die by your trading plan. I don't know. I don't think I have my trading plan on this computer. I just got a new one. But every time I trade, I have my trading plan. My trading plan is always smarter than me. So a lot of times we get our emotions jumbled up in the charts, and I'll be like, oh, man, it's going against me. Now, this is fear-based. This is trading we don't want to do. So we're not looking at this like, okay, it's pulling against me. What I'm looking at is I'm going back to my trading plan. What does my trading plan say? Does it tell me that, you know, does it tell me when I put in a trade, I either let it, i.e., hit my take profit or hit my stop loss? So if it hasn't hit my stop loss, I'm not going to wear it right now. Even though it's an exaggerated move, my stop loss will probably be above 61.8. This is probably where my textbook stop loss would be, with somewhere up here. Now, is that stop loss going to follow my rules that I have in my trading plan as far as how much I'm risking on each trade versus how many pips I'm looking for. Personally, I only go for 1 to 3. So if I'm risking $1, I want to get $3 out the market. So if it follows all those guidelines, I'm not worried because I'm not looking at one trade. I'm looking at a sample size of trades throughout the week to allow my edge to play out and allow me to be profitable in the market. So I see a lot of traders that gets kind of frustrated and flustered when they see those big moves like this. They go ahead and just close the trade. They give up on it. Oh, it's just a dud trade. When the trade didn't even hit their stop loss yet, or they have the stop loss too tight. So it's going to be little nuances like that that will give you an answer to what to do when you see these big exaggerated moves. You did highlight on entry. Now, a lot of people are stuck on, oh, well, entry, I have to have the best, sharpest entry. No, you don't. That's where your trading plan comes handy, or that's why your trading plan is going to be smarter. I say my trading plan, I got it from one of my mentors. My trading plan is smarter than I will ever be. So I'm not trying to get the perfect entry. I'm not trying to get the exact where the price is going to bounce. I'm letting the system. This is where you guys are going to start. You see, you got me in some more advanced techniques. We're supposed to be market structure. Now we're going into system building. This is where you guys are building a system that's going to do the heavy lifting for you. So instead of me being, off my edge, being psychological, being, seeing the money go up and down on this, I just know that, let me look at my trade plan. Okay, does my trade plan say if price pulls against me to get out? No, it says for me to hold this trade until it hits stop loss. So we see here, it never hit stop loss. If we got in at this point and bam, it dropped back down for a nice little profit. Now, at this point, I'm like, okay, do I want to take profit? What do I want to do? I'm asking myself the same questions. I just survived a close call. So I would want to pull my stop loss. Now this is what I'm going to do. This is where you get into trade management. Now I'm going to manage my trade. Bam, look at that nice drop by me being patient. Me following the trade plan. Bam, I got a nice drop out of that. That was a nice example, man. I appreciate whoever that was. That was a nice drop there. So did that clear up? I know it was a little dragged out as far as the concepts behind it. I do have this recorded, but does that kind of answer in a sense? I know you may have been.
Yeah.
Okay.
Thank you.
No problem. Now, I know a lot of people, they like to look for technical reasons to know, but those concepts I just went over supersedes the technicals. Live and die by your trading plan. There are a couple of things we can use, like as far as volume, but we're going to piece those out that we'll know if this momentum is going to continue. A short answer would be to use like Fibbo level, Fibonacci, extensions. How far? Let's see here. If it retraced 50% of the initial move, then you can actually, expect that to continue up. There's another concept that I teach as well, and I have a video that I'll try to attach to this, but it's called the rubber band man theory. So the rubber band man, a lot of my people are like, I know Sharon probably, she's familiar with this, but the rubber band man says that, we look at the market as a person that's running a marathon with a rubber band around them, which would be kind of these actual points, these swing legs. So we have, figuratively, we have a person that's running a race in the market. We have him drop down. He starts the race. He's doing good. He's running. He's breaking records. He rests a little bit, or he pulls back. So when he rests, the rubber band pulls him back a few steps. It knocks him back almost to where he started. So he pulls back. He rests. He starts off running again. He's strong. Now, would you guys say? Let me get a one in the chat room. If you guys would say that he still has a lot of energy, or I'm gonna answer this one. I'm gonna start this one off for you. If you look, he was able to break his new record. He ran maybe about 15 kilometers here, rested for a few seconds, took off for about another 20 kilometers. He's coming back. He's resting. He takes back off. At this point, do you guys still see? Does he still look like he's healthy? Like he has breath in his lungs? we're not looking at this. Don't look at this actual. Let me erase this here because I don't want to confuse nobody. We're not looking at this swing here. Okay, so from here to here, does he still look like has a lot of momentum as far as his
No,
race?
it's like almost consolidation, but
It is if we look here, but as far as his run, like his drop down,
It looks like it's losing momentum. The candles are getting smaller. Look like it's getting ready to stop, or the train is getting ready to slow down.
there
In
we
my
go.
opinion.
No, but see, man, you don't count, Siobhan, man.
I'm in the back of the classroom and say, hey.
We got the Wiz kid come up, man. But
Yeah, Nicholas,
yeah,
don't leave out the show offs, okay?
yeah. So yeah, man, I had to give Siobhan the straight A student back there, back in the class. We got our savant. Let's see. So, okay, we see him running here on this leg. We're gonna say he is still healthy. He's still running at a pretty good distance. He actually, what I wanted to kind of highlight is that he beat his previous record. This is a longer run down. Now, as Siobhan, my brother there actually highlighted, it is going into consolidation. So this would be a good place to get out the trade. But we didn't break that previous high. So we technically could stay in there. So he's coming down. He's still looking healthy to me based on the rubber band theory. So what happened is, let's just recap real quick. He came down, he rested a little bit, dropped down, rested a little bit, dropped down, a nice move. Like Siobhan was saying, this will be the end of the micro trend. So in a smaller basis, yes, we want to get out of this trade. He's tired, he's exhausted, he's out of energy. But hey, what happened here? He got brought back to life somehow. I don't know if they gave him some Gatorade or what they did there, but wham, he takes off again. He surprises everybody. The rubber band for some reason was reinforced when he took off with so much momentum. It did slowly kind of pull him back a little bit. He got back up here to this point. He takes off again. This time he's beat all his previous highs. Most of the time, textbook would have told us he was dead for us to get out of the market. The books, any book you read, any video, most of the time is going to tell you, get out this market. He's done. We have to go back to, this is all speculation. It's based on perception. So Siobhan was definitely right. It was take your money and run. But if we're looking in the macro, the grand scheme of things, you guys could hold this because he never violated the previous swing. His previous run, it never put him all the way back to the starting point. He never got snapped all the way back. So he's still good. He's a little tired. He's like Rocky. He's in like the 10th, 9th round. Well, we're going to see if he can get that knockout. Bam, he takes off again. He beats his record. So based on a running man, I'm still selling. I'm still waiting. I'm not putting in new entries, but I am still holding this sell because he never violated the previous point. He never lost the race yet. He's just resting. So now we get the same type of deal. This time it's even more exaggerated. But that's expected because how long he's been moving. So in the mini scheme of things, if we're looking at a sprint, okay, he's out of there at this point. He's too tired to continue. But if we're looking at this as a marathon, if we're marathon running, he hasn't done much damage. He didn't. It's not like he came all the way back to the starting point, and bam, he wasn't able. He barely did kind of poke out a little bit from this actual lap. I wouldn't say the starting point, but the lap. He made a lap here, and the rubber band pulled him back to the start of that lap. But he didn't too much get too higher above that, and he took off again, giving us a new low. And then we can look at the market from horizontally or diagonally. We have the lower low here, lower highs, lower low. This is kind of gray area based on perception. But now that you guys hear the running man theory, you can kind of take the concept of let's look at this whole run. We look at the whole run. He had a nice run. Now he's resting. Did he rest longer than he ran? No, he didn't rest longer than he ran. So there's a still a probability that this is going to drop. This point is where you want to protect yourself, have your stops. But that's another concept, you guys. And I'll post the video I did before going over the running man, and it'll help you guys with the determining if it's just a pullback, a retrace, or if he's just resting. What is the market telling you? So y'all don't want to go too far tonight on, because we can talk hours for different things. We're all. I won't say that no one is 100% correct in the market. So it is based on what suits your needs, what suits your style. Some of you guys are going to be scalpers. Some of you guys are going to be intraday traders. Some of you guys are going to be swing traders, like I like to trade. So we mesh all these things in a pot, and we mix up with a nice gumbo. And then that's when we're actually cooking. I like to say we cook up on the charts, or we actually cooking on the charts. So we'll leave it there, and I'm gonna send out these recordings. Before we do that, I'm gonna ask this: was everybody following me so far? Anybody have any other questions, concerns? And we'll jump there. I know we hit a lot of different topics tonight. Well, all right. I appreciate everybody's time, and we'll I don't have an exact schedule yet, but maybe tomorrow we'll jump on. I know this week we're gonna hit it heavy, and we'll go back to a base level for any of our newer people, and we'll build our way up. I think we're also a lot of people here is gonna be with Tradera, so we'll start knocking out the syllabus soon. So that's what I would recommend you guys do is tonight or this weekend for the next few days. Start pointing out your higher highs, higher lows. Look for consolidation. Start marking up your zones and get familiar with what the market is telling you, the story that it's telling you. And then what we're going to add in on top of that is the numbers. Because if the numbers don't lie, women lie, men lie, the numbers won't lie to us. So we'll start noticing how to find key points of where the market's been and where the market's going. But I appreciate everybody's time, man. I'm going to cut the call tonight. I'll send the recordings out there. Everybody have a blessed weekend, man. Y'all stay safe with all this virus going on. Make sure, we washing our hands. We're staying away from people. And we're taking this time to get more familiar with the market. So, we don't have to, at least we're still have a means if there's going to be an end. But y'all take care, man. I'm going to close out. I appreciate everybody joining.
All right. Thanks a lot, man.
You take care, bro.
All right.